Hey everybody, Smart Silver Stacker here. Looks like we are beginning to experience the consequences of the Fed's decision yesterday to hike the federal funds rate by 75 basis points. Stocks in the red pretty much across the board. Major sell-off, a lot of pain in the stock market. The NASDAQ down around 4%. That's the worst performer of all the major indexes. Bitcoin also getting hit in a big way, back down to around the $21,000 level. But one thing that's not selling off is gold and silver. In fact, both of the precious metals catching a nice bid today. Gold taking a run back at the 1850 level, silver hanging out just around under 22 bucks. So they are regaining a lot of the ground that they lost at the start of this week. And I expect this to be a trend that continues as investors begin to realize that the Fed's attempts at controlling inflation with these interest rate hikes are going to be in vain. In fact, I think the only thing the Fed is really going to accomplish here with these rate hikes is they may crash the stock market and the housing market, and they've already pretty much taken the air out of the crypto bubble, although it looks like there may be a little bit of air left in that bubble. When you look at the chart of Bitcoin or Ethereum or any of the major cryptos, looks like there may still be some room to fall. And Bitcoin, for example, on that chart looks like next significant level of support will be around $10,000. So I would not be surprised if by the end of the year that is the price that Bitcoin touches. But metals, I do believe, will continue to move higher. And of course, that's just the paper price that we're looking at. The premiums remain elevated. So, if you want to get an ounce of silver now, you're going to be paying around $25, $26, maybe $27 after today's gain. So metals are doing okay. And investors are going to view those as a safe haven. And I believe investors will begin moving into the metals more and more as it becomes evident, like I said, that the Fed is unable to control this inflation problem because this 75 basis point hike, this is being portrayed as like the big guns the Fed's bringing out. It's the biggest hike since, I think, 1994 or something like that. And that's the headline you see, like the Fed is really getting aggressive. Well, last time inflation was like this, back in the 80s and the 70s, Paul Volcker had to ramp up interest rates a lot more than 75 basis points. And I just don't think that Jerome Powell and the current leadership at the Fed is going to have the wherewithal or the guts to hike interest rates in a big way like that. Of course, if they were to, it would absolutely decimate the economy. And, big difference between now and back in the 80s is that there's just so much more debt now that consumers, the federal government, corporations, you name it. There's so much debt in the system now because of the easy money policy that the Fed has had in place for so long. It has encouraged everybody to assume all of these massive levels of debt. And now, they can't raise interest rates. It's just not feasible because it would make all of these debts unpayable. And that would, of course, have some pretty serious consequences. And it will become clear to investors moving forward that inflation is getting out of control. I mean, as far as, consumers go, I'm sure if you've been out to eat lately or if you've been to the store, you know that inflation is beginning to hit in a really big way. And we recently got the wholesale inflation numbers, which represent the costs that manufacturers and businesses have as inputs. And, that was around 10.8%, I think. I don't have it in front of me, but it was higher than the CPI by a pretty good margin. And what that reflects is that businesses have not begun to fully pass on the cost of inflation to consumers yet. They've probably been trying to keep prices low in an attempt to maintain market share and to stay competitive. But there's going to come a time when that is no longer a viable strategy. We've already seen retailers like Target and Walmart, their margins have been getting impacted in a big way by inflation. And I think that those numbers indicate that the consumer is just going to continue to get hammered as businesses are going to be forced to pass on those high inflation levels. And, nobody in any leadership position is doing anything meaningful. The president is talking about taxing windfall profits from energy companies, and that's such a ridiculous move on its face. Anybody who knows anything about economics knows that if you tax something more, you're going to get less of it. You have to try to incentivize energy producers to produce more oil and gas if you want prices to come down. But raising taxes on them and taxing their profits is going to accomplish exactly the opposite of that. So it's more misguided policy, the same sort of thing that got us into this position in the first place. And, when I say that the Fed's rate hikes are not going to be able to bring inflation down, the reason for that is when you raise interest rates, the way that you are impacting inflation is you are incentivizing people to save their cash rather than spend it. And these hikes are just not enough to do that, because if you think about it, before the federal funds rate 0.75% before this hike, and with inflation around 8.6%, that means that you're losing 7.9% of your purchasing power every year when you're holding cash. And, that's using the CPI. I know that understates it, but let's just use the CPI for now. And so now with the federal funds rate at 1.5%, that means that you're losing 7.1% of your purchasing power. So what kind of an incentive is that for individuals to save cash rather than spend it? Not much. And I suppose that it is better than 7.9% of your purchasing power being lost, but it is only marginally better. And it is just like this policy is not tight policy. It is just marginally less accommodative, marginally less inflationary, but still absolutely on the inflationary side. Still, by any historical standard, the interest rates that we have right now are extremely accommodative, extremely inflationary, and the money supply is going to continue to expand. And if they continue to hike rates like this, it may accomplish plunging us deeper into a recession, but it's not going to get this inflation under control. So as that becomes more and more clear, I think investors will continue to move into the precious metals space, and that's why I am still stacking. And today in stocks, there is a bit of a sell-off in the miners. They're getting sold off just like everything else, so that might be a bit of an opportunity. Not financial advice. I'm not telling anybody what to do. I'm just telling you my thoughts on the markets and what's going on. And another contributor to high inflation that we're going to be seeing is the continued increase in gas prices and energy prices in Europe. We had that explosion at that liquid natural gas terminal in Texas a couple days ago. That is going to reduce the U.S. ability to export natural gas to Europe. And now Vladimir Putin and Russia and Gazprom, they are cutting the amount of gas flow through the Nord Stream pipeline by about 40%. That was the last I heard. And they say it is because of technical problems and repair issues. Germany has come back and they've said that this is all politically motivated, and I suspect there's probably something to that. It's probably a bit of a thank you from the Russians for all of the billions of dollars of weapons that have been delivered to Ukraine recently. And as a result of this kind of perfect storm of energy prices, this week we have seen natural gas prices in Europe spike up by about 70%. So that is an enormous move. It is obviously not sustainable. They're already shuttering factories in parts of Europe as a result of these rising energy prices. And we're in June. So what is this situation going to look like as we head into winter? When it starts to get colder, when people are needing to heat their homes, it is going to be an absolute disaster. Expect these supply chain issues to get worse as these factories get shut down in Europe. They're recommending in some countries, I believe, that people should go out and collect firewood to heat their homes. So that gives you some indication of just how bad this problem is going to get. Think about that. If a couple years ago, I had told you that Europeans would be burning wood to heat their homes, people would probably think that that was crazy. I'm sure that there's some people who like to burn wood. It's nostalgic. It harkens back to an older time, but certainly not as efficient as burning natural gas or using electricity or fossil fuels. But that is exactly what we are going to see individuals forced to resort to as this calamity unfolds. So expect prices to continue to rise across the board. Looks like stocks are going to continue to experience some pain moving forward. And precious metals, I think, are really going to begin to shine as the inflation hedge and the safe haven that they are. And I have a lot of people in the comments, they'll tell me, oh, gold and silver aren't inflation hedges because they haven't moved up yet, even though inflation has moved up. Well, two things I have to say about that. One, inflation doesn't affect all asset classes across the board in lockstep. That's just not how it works. There's a lot of things at play. People still view the dollar as a safe haven. So when you're pricing precious metals in dollars, there's an effect there as well. But also, just look historically. Look at every single incidence of inflation or hyperinflation that the world has experienced over the past several centuries, because there's been quite a few, and find one, please, point one out to me where gold and silver have not maintained their value, because as far as I know, gold and silver have never gone to zero in their monetary history. They're never going to. Unless somebody comes out with some magical scientific way to turn lead into gold or something like that, gold and silver are going to maintain their purchasing power. And are they going to shoot up in a straight line? No, obviously, assets don't do that. No markets move up in a straight line. But the fact that they're still so cheap in dollar terms and we're facing this economic calamity and inflation, it's not a sign that they're not inflation hedges. It's just an indication that they're extremely undervalued and very cheap, and it's a huge opportunity for anybody who is paying attention. So I hope that some of you out there are paying attention. Again, not financial advice, do what you're going to do your own due diligence. And I would love to hear what all of you are doing to get prepared for this inflationary catastrophe which is approaching. Let me know in the comments down below. Big thank you to all of you who watch and support the channel. Stay safe and happy stacking, everybody. Smart Silver Stacker, out.